Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now guys, couple of words on the gold market. As you can see, recent plunge down and the gold market looks not really pretty for bulls, so it's really that was really solid sell-off as the commodities market has continued to huge decreasing, especially the crude oil. But take a look that the market very often has rebounded previously after very significant sell-offs. So you can see here was the huge sell-off on non-farm payrolls release, fast rebounding after the closing the shorts. Here is again. So in general, the combination when the market shows really plunge down based on the really positive surprises on the data from the United States and the corresponding closing of the shorts looks not quite logical. Right? So why investors close the shorts when they see the strong confirmation of the further downward action on the gold market? When you have the 50% surprise on the non-farm payrolls release, when you expect the 200, when you get the 300,000, so it looks a bit curious. So why they close the shorts when they have supportive data that is general supports for the downward action? Here again, the market new upside action. Now we have another sell-off, but although it looks really terrible at the first glance, really significant sell-off, but in general nothing drastic has happened. And currently market stands at some point that should clarify further behavior, because take a look what we have said previously in our analysis. We said, guys, we could get here the big reversal pattern, and that reversal pattern could be the reverse head and shoulders. And right now, market stands at the point where a potential bottom of the right shoulder could appear. That's the lows approximately around 1980, 1990 area. So where the previous lows stand. And that could become the part of the right shoulder. So what we would like to say is that nothing is lost yet for the gold market in terms of the possible upward continuation. Yes, this was the big sell-off, but it hasn't passed through the crucial levels yet. Besides, from the normal behavior of the upside trend, market just retraced to the weekly pivot support one. And that's normal when the weekly pivot support one holds the downward retracement with the upside trend. That's absolutely normal behavior, especially when the market hit the neckline. So, other words, we do not treat the sell-off as the drastic shift in the sentiment yet. If market will pass through these lows and return right back down to this area, below these lows, maybe will even pass this FIB support 1170. In this case, we could say yes, market really could continue move lower. Maybe we will get the new leg to the downside until 1050 area, or at least market will clear out of these lows, will reach this bottom again. But anyway, this will lead probably for the further downward continuation. If this pattern will fail, usually when the head and shoulders fails, the next target is the bottom of the head at minimum. So in this case, if market will fail here, we should be ready for moving to the 1130 area again. But while market stands here, the chances on the possible rebounding still holds, especially at the eve of the on the Fed meeting. So if Fed will keep the considerable period of time phrase untouched, that could lead to that probably will lead to this further drop. If they will erase this phrase from the statement and will hint on the possible rate hiking sooner, that could really lead to the significant changes on the gold market. So that probably will lead to the further downward action. So if we wouldn't get on the horizon the possible Fed meeting, in this case, yes, pure technical picture doesn't look very fascinating for the bulls. But with the Fed ahead, everything could happen. And with the potential pattern, and while market hasn't passed through the significant levels, we still do not want to be hurried to just refuse the possible deny the appearing of the reversal pattern. That's just too early for that. On the 4-hour time frame chart, yes, market has broken this tendency, and that looks not very good. This was nice sell-off down. This is a nice moving to the downside. Market has passed through this channel and has broken this harmonic swing. But at the same time, if you'll take a look at the hourly chart, you will see that market just completed the ABC top 1618 extension. And in fact, with this ABCD pattern, market also is creating the agreement with the 1197 fib support. So that also adds some strength, this agreement, to this fib support. So we stand at the daily agreement and weekly pivot support one. That's also the previous lows, and that's potentially area where the right shoulder could appear. That's why, guys, it's a bit too early to speak on the failure of the upside action, and that's too early to start the preparation for the downward continuation. For that purpose, we need the breakout for this area below these lows and failure of this potential head and shoulders pattern. In this case, we could count maybe to the 1130, or even as the ultimate target to the new lows at 1050, maybe as our monthly target. But let's see what will happen, and until market still holds here, the chances on upside action still exist.